All right, Henry, let's get started. So, what is the first thing on the agenda that we want to
Okay.
talk about?
Hey, yeah. Hey, welcome, Frank.
Welcome.
Yeah, we just
Hi.
finished our Sunday call. How's it going?
Yeah.
And I got
Good.
your I got your message that you're on the way home. I'm like, I think he's gonna get back like right on time. So good,
Yeah.
man. Okay, good. So for the clarity call, we want to pack as much information to be a value of you so then you can I think I read your profile that you were trading before for a couple years, so you watch the market. So
Yeah.
this hopefully we can get you back in the market. But at least initially we can get you back on paper trading so you can back test strategies,
Yeah.
try our strategy, see prove it first and then take it to the live market. So the crazy
Yeah.
thing is that with
Mhm.
what just happened over the weekend, so this week might be kind of crazy. so
Yes.
so
Yeah.
it's a good time to kind of monitor and study,
Yeah.
and so me and Ron, we've been probably since the pandemic we've been trading, and so we
Yeah.
see these kind of situations arise, then we just go
Yeah.
back to the books. We go back to studying. We just take a little time off. Like I know some traders are so eager and they're like trying
Yeah.
to force the trade.
Yeah. Sometimes
They have to,
they day trade, right? And they want to find all the supports and resistances and try to day trade, which
hmm,
can work, but you need to really be in front of your machine at all times, right? Because
yeah,
things
Yeah.
change so fast on the smaller time frames that
Yeah.
if you're not ready for it, it goes away.
yeah,
So,
yeah.
Okay.
Yeah, one thing from experience is that like when there's bad news that happens over the weekend, um, the market is kind of like a weighing machine. It kind of
mhm.
decides like, okay, how bad is this news, and how does the market interpret it? And then so, when it's still weighing, you don't necessarily want to just buy in blindly. You're like, hey, wait a
Mhm.
minute, the market still has to kind of digest it. Like the initial
Yeah.
1 day, I notice can be like a buffer where the real
Mhm.
reaction isn't there. Sometimes
Yes.
the real reaction happens 2 days later, as late as two
Yes.
days, or it's the second day. It's like, oh, hey,
Yeah.
jobs report is good. Everyone's working. Everyone's hired. Economy's doing great. And then you see the, SPY go up 6 points and you're like, okay, cool. I'm going to jump in. And then the
Yeah.
next day you see that, oh, SPY minus 14 points. So like that wasn't the real reaction. The market was still winning. So
Yeah.
when you see these kind of like key points, good to just take some time off, chill a couple days and get back in the books.
Well,
Look for
let's start off with the basics first, right?
yeah,
Let's start off with
Yeah.
how do we look for a choppy market versus a trending market?
okay.
How do we
For
like
for
yeah,
for number one and on for must reads, um,
yes,
let's go with the Bill O'Neill.
yes.
Yeah.
Okay, so Frank, Bill O'Neill, this is the book right here, How to Make Money in Stocks,
Okay.
right? Highly recommend this book and read it if you can find the time. Read it cover to cover,
It's
right?
it's
Really
an
good.
old book, but all the
Yes,
fundamentals still hold up until today with AI and all that.
yes.
Bot trading. This still is a good
This is a
manual.
fourth edition.
Yeah.
Yeah.
Um, and but I think he started writing it back in the 60s when he first started the Investors Business Daily,
Okay.
right? And it discusses both the technical side and the fundamental side. Um, for so if you look at the IBD website, you don't need to subscribe to it, but just find some good ideas there, right? It's called investors.com, and I will type it here on the chat for you as well, so you have it.
Yeah.
Right? Investors.com. Another site to look at is Zacks.com. And so these two sites are really good to find some ideas on what you want to trade, right? Like the stocks, build a watch list, so to speak.
Yeah.
So Henry, do you want to share your screen and let's get we can start on with the agenda.
You guys can see my screen. Hang on 1 second.
No, I think you need to share it because I came out and came back in, right? So I think we want to share the screen, and I think you have the permission now. Yeah.
So yeah. So
Yep.
this is the book. I think
Yep.
the one of the editions I got was really old. It was a green one, and then
Yep.
it
Yeah.
switched to the orange one.
Yes, the orange one is the one you want to get.
This one, okay.
Yeah.
Okay.
And so this is a good reference area, is the investors.com. They kind of
Right.
have their own proprietary like scoring on how they rate stocks, but it's really good to get all the fundamentals down. So
Yeah,
these,
because the problem is you won't have the time to go and find, oh, is the company fundamentally sound, right? You'd have to do a lot of
Yeah.
research, right? So this actually vets it for you,
Yeah.
yeah, throws it
right?
down in its sector. It lets you know how it ranks against
And
others. So
Yep.
yeah,
do
people like
you,
to.
do you need to subscribe or no?
Not for that.
Not for that.
Yeah, not for that part, right? You don't need to subscribe. For
Yeah, you just use
yeah,
it
for the recommendations,
like a
like for what they're,
yeah, like
you
a,
do need to subscribe if you want to go deeper,
Okay.
yeah.
right?
But the with the value that you have for free, you can get a lot of info, so a lot of intel.
Yes.
Okay. And then so yeah, here's the agenda.
This is what we're
So
going
how
to do. Oh, do you want to send this to Frank as well?
yeah, sure. Hang on one second. Let me
Yeah,
reset. So yeah,
right.
first is how to trade this market. So Frank, did you get to download a trading view?
Yeah, I already have Trading View the full version.
Excellent.
Full version? Okay. Okay. All right. So then we're gonna help you with how to use ADX, and then this is gonna let you know what kind of market that we're in. Are we bullish? Are we bearish? Are we choppy? And so
Yes.
a lot of times you need the environment in order for your strategy to work. I think
Yes.
most strategies are like that. So once you have
Yeah.
the right strategy that fits you and that fits your time, and you have the right market, then you're in business.
Mhm.
Yeah.
Let's see here. Hang on one second. Right now I'm trying to find the clarity call.
We
Um,
need a trading view, right? Or to show the whole thing.
Hang on one second. All right, let me go to trading second. All right, I'll start with a blank chart. We're going to be plain OTB. And let's look at PQQ. Now we should be cleaner.
Yeah, there you go. Yep.
I'll take these out and re-add them. So let's see, squeeze. EBA smart money.
Yep. So we can show you how to add them back.
So this is an alert. Take it out. Okay. So if I'm looking at a chart like really plainly, I'll add just these two indicators. It's the 50 simple moving average
And
the
the 200. Yep.
Yeah.
Yep.
moving average. This is golden cross and death cross. So as you see here, this looks like around the time was this tariffs?
This is the tariffs. Yep.
Tariffs. As soon as tariffs was announced, you kind of hey, we got a death cross. So this is
Mhm.
caution, but the market
See,
eventually.
you want to look for the tightening price action before a drop or a rise.
Let's see, that was around February 25.
Yeah. So see there, right where you are. That was the tariff situation, right? And you can actually see the tightening price action on the weekly chart, right? So anytime the weekly chart, so Frank, a quick thing right here, okay? This is the squeeze, okay? Have you
Yeah.
learned about the squeeze in any form, way, shape, or form from before?
Yeah, a little bit.
Okay.
I know a little bit like how it works.
Yes.
Like lender and
Hmm.
buyer and yeah, I know a little bit about that.
Yes. Good. 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 So just as a quick thing right here, when the squeeze is on, right? Now you don't
Yeah.
need to worry about the color of the dots, right? All you care about is it on or off, right? So if it's on, that means the price action is tight, right? It's like it's wiggling around. If it's
Mhm.
off, that means it's the it's now more volatile, right? It's it'll be either volatile to the upside or the downside,
Mhm.
right? So whenever you see the squeeze turning on, right, you need to be on alert, like on the weekly, right? Especially weekly and monthly. Daily, it happens, it happens a lot, right? Because of the, because of the up and downs, right? So on the daily, the squeeze, turns on, often. So it's not
Okay.
as critical, right? But when the price action is tight enough for the weekly to turn on, better be
Yeah.
ready,
Okay.
So
right?
from the squeeze weekly, this is my
Mhm.
favorite. When I start to see yellow histograms,
Yes,
this and then also here we have a higher low. So this is letting us know that the trend is changing direction.
yes.
Here you
And you
see
can buy right at the, so this is an index, right? Like QQQ, SPY, and stuff like that.
Yeah.
Whenever the weekly chart squeeze turns from red to yellow, right? If we are lucky enough to get that, buy immediately. And anytime you see like red candles, right, that go back down, right, to averages either on the daily or the weekly chart, buy some more, right? And then set a target
And
to,
what?
to get up.
Sorry, what did you said? You said
Yeah.
like
Mhm.
if the candle pass.
Yeah.
so
Right. If it
uh,
if it changes from, if the histogram, right,
Yeah.
these
Yeah.
bars at the bottom change from
this is
red
Yeah.
to
good.
yellow, start buying immediately.
Okay.
So this is a good safe zone to holding to hold.
Right.
If you these color candles, you can
Yes.
be hold.
What is the difference between like stock and option?
Oh, that's a good question. So stock is basically just the shares, right?
Yeah.
So
Yeah.
they have no expiry date or anything like that. They are just priced at a certain value, and you buy them, right? And that gives you the
Yeah.
share in the index or in the company. Options
Yeah.
are contracts to buy those shares at a certain price,
Yeah. Yeah.
right? Or sell. If you're doing a call, it's to buy. If you're getting a put, it's to sell it.
Okay.
So, put is basically
So
bearish and calls are bullish.
But what acting the fastest? It's like if you buy
Hmm.
stock and you need, if you buy stock like you need to wait like for a long time to get back maybe the money, and
Yes.
the
Hmm.
payback
and
the
this
payback
capital,
is way longer than option, I think.
Yes. Yes. It
yeah,
will take
you
you
need
longer
a lot more.
to, and you need to put a lot more money in as well.
Yeah, right.
So you want to keep that in mind as well, when
You
you're
can
when
use
you're doing this.
Yeah,
Apple as an example. Um, so if it's Apple, if it's 264 per share, so if you wanted to own 100 shares, it would cost you 26,400 to own 100
yeah,
shares of Apple.
Yep.
But we were to control it, you want to just control the shares. So let's see, let's look at the APL. So controlling the shares meaning that you don't own it, but you can benefit from the upside or downside from it while you're controlling it.
Go to the
So
yeah,
option section, right, to see the price on it.
then if you want to control it for, let's just say, I guess maybe 6 months. Let me see. Let me look at the weekly. Okay, so this would be a potential here.
Yes.
So weeks this is looks like 29 bars and 30 bars. So it looks like 7 months. Let's just say 6 months. So you decide here that hey, I have some yellow histograms. I
yeah.
like Apple, and it's also squeezing. I want to take some, and because I think that this is a potential move. This is the potential
Hmm.
upside. So once I identified,
But
so
but do you need like a minimum volume to go in option or?
well, it'll be one contract, and then I'll show you the
Show the
prices.
price, right? So you can find the prices in Yahoo Finance. Just go to the options section,
So you just
right? And you want to go 7 months out, right?
go September, and
Right.
then
So if you go to September and look for 264, right? Oh, well, 265 here, right?
let's let's pick something I guess in slightly out of the money.
Yep. So
So
remember how we said you'd need to pay 26,400, 26,500 or something like that? Well, here you pay, what is that?
sorry, let me go
No, no,
back.
you got to go back. Yeah, you got to
I
go
lost
back and hit, yeah, check the option.
my screen. Hang on 1 second. All right, so let's go. Here. It's 270. No, I wanted
265, 270, whichever one.
go to September,
Yeah,
and then I'll go down here. So
right. So there you go. Look, 265, right? So the same thing that would cost you 26,500 would only cost you 2,400 here,
Mhm.
right? So when you see these prices, you have to multiply them by 100, right? So you see how it says 24 there, right? Multiply by 100 to get the actual price of the option.
Yeah.
yeah, so this one would cost looks like around 3,000.
Yep,
So these, the ones slightly out of the money, maybe around 24, 2,200. And
yep,
then when you're looking at options, Frank, you want to look at this column here, which is open interest.
right,
Yeah.
How many people are in the auction house? So
right.
here's one.
How many people actually want it,
Yeah,
right?
how many want to
How many
buy
people
it?
are interested in it?
So this particular strike at 270, there's only one person. So I'm not really interested in that contract. It expires looks like 8/25. It's like a non-standard, maybe non-standard expiration.
Yep,
So what I look at is I want to look at something that has a lot of people in the auction house. A lot of people are
yes.
hitting bids.
And is it the same thing for put?
Puts, yes, similar,
Is
right?
is the same mechanic?
Yeah, except you're looking for the price to go down there,
Yeah.
right? So,
Yeah, Steve,
yeah,
on your next paper trade, I would recommend that first find something like this, where you see this kind of yellow, and it has to
Yeah.
yes,
have to be a popular stock, like Apple, Netflix,
yes.
Visa, Max.
Yeah, I got some. I got a list like of
You want to build a watch
maybe
list, right?
Good.
WSP.
WSP.
Let's look at that one. Yeah,
Okay, it looks like it's a real estate. Maybe it's a real estate trust or
No, USP. I think it's I think it's on TSX. Might yeah, it might be the problem because I don't think have
mhm,
don't have option on TSX, I
mhm.
think.
Okay.
okay. All right, so here's another example. Netflix. It looks like here, if you got in on the yellow, you had an upside of looks like around 26%, somewhere right around there. If you just kept it conservative, you only traded the yellow to the cyan, then
Yep.
that's a good
Or to
trade
the
right.
previous resistance, right? Just trade it up to the, when it gets close enough to that previous resistance, right? Then you
Yeah.
get, right?
Okay.
So that's another target you can set.
This one tells you that hey, people sold here before, so if you're getting close, then they're probably going to sell again.
Yep.
Because
Okay.
it's
Only
rare.
because a lot of people bought there thinking, oh, wow, look, Amazon's going up. Let's buy. Right. So
Yeah.
what happens when it comes, those people lost a lot of money when it went down, right? So many
Yeah.
of them are keeping it now, right? Because they're like, well, let it come back to that price where I bought it at least, and then I'm going to sell it off, right?
Yeah.
So when it comes
Yeah.
back up there, you see how people, are like, oh, I'm getting my money back now,
Yeah.
right? So I'm going to be looking for a breakout there if I were to buy again,
Okay. Okay.
That's a good.
right?
And what I got here is a
Mhm.
Autodesk ADSK.
Okay, let's look at it. ADSK. Okay. Okay. So this
Okay,
is unfortunately one of those.
this is like a cat
You're
stock.
looking at the daily, right? If we're going to look long term, we want to look at weekly. but it looks like it is coming back up here, which is nice. But you
Um,
know, how long
you-
will it last, right?
yeah.
Will it just go and hit the averages and come back down? That's the problem.
And which average, the MA 200 or?
Yeah, yeah.
Um,
See, it's right at the 200, right?
Yeah, yeah.
It went below and came right back up,
maybe
right?
shop at that price.
Yes.
Some buyers could be shopping at this price. There's some
Yeah.
people.
So here's what you should do, right? You can either buy it when it turns yellow. So if you're at the weekly, right? When the weekly turns
Yeah,
yellow, right? If you want to take a chance, you can buy
yeah.
it there, right? Or you can wait for it to kind get a tight price action again,
Okay,
right? And then buy it there, right? Rather than, so when the squeeze actually turns on, then you might say, oh yeah, maybe I'll buy it there, right? So it depends on what your risk tolerance is, right? You can see how it broke out there, right? So if the
This
if
is good.
the
Yeah,
histogram turns yellow and it's doing that, its thing, great,
you might have
okay.
something here.
right?
You just need some yellow histograms to help you.
Yes,
You know, this will kind of confirm it. Like when
right.
you see this red, it's kind of telling you that this downside might not be done.
Yeah.
But when you see the
But when it
yellow,
turns
you're like,
yellow,
hey,
that's proof of some
the
accumulation,
it's starting to shift. Yeah, the
right?
investors are buying this
Yeah.
stock, and so
So if
this
investors
one
are
is
buying it, right, you want to get in with them,
Okay.
right?
yeah,
So
this one is
that's
considered.
something to also think about.
And when you look at the stock, is there a minimum volume per week, per month you look, or like an option, or
Um, what I
like
like to see,
million per month?
mhm. See the volume. The volume
I
is
like to
right here, right?
30,
In that.
30 million. I like 30 million.
Mhm.
Um, I've seen some trades work as low as 3.5 million.
Mhm.
But yeah, like we prefer large caps. So I don't know what the large cap average is on a day, but it's I think it's up there. It's like in the 30, 50, 100 million a day on
Yes.
those blue
What you
large.
want to do is see if it's going above the average,
okay,
right? Whether it's selling or buying, right? You see that orange line right there. That's the average volume,
yeah,
right? So if it shoots significantly above that, right, you should be interested,
okay,
right? So
Okay, so
especially if it's like 3 to 5 times the amount, right? You should definitely 3 to 5 times the average volume,
okay, yeah,
right? You should definitely be like, all right, I'm looking at it, and for that you want to use the daily chart, right? Because
the
a lot
deal,
of hedge funds, buy, like that huge amount of volume, right? And then when the stock falls down to the 50-day average, right? They will be like, oh, it's falling too far. We better, push the price up again, right?
okay, yeah,
So then they will, jump right in and push the price up, when it bounce, making it bounce off again, right? But that's only true if they, really bought it and they really believe in it,
yeah,
right? So keep it in mind.
good.
all right. So
All right. So let's go to, oh yeah, possible downside. Let's go back to the SPY, right? So a couple of things we want to show you here, Frank. Um, so if you look at this, right, we want to do the SPY, both the daily and the weekly. We want to show you both. And the
yeah.
reason we want to show you both is because, see, if the daily has been choppy long enough for the weekly to register it, right? So what I mean by that is you can see, right, you can see the squeeze right here, and also show the
Yeah,
ADX, right? So we can give everything in one
So
blow
yeah.
here.
yeah,
So when you add the ADX,
Mhm.
Frank, it's this
This
one
is
right.
the one.
It's
Yeah.
80 DI plus and DI minus.
Hmm.
Um,
okay,
I
So
can
make sure you note that down. And of
Yeah,
course, this will be recorded. This is recorded, and you're going to get the recording as well.
we'll do
So
the recording and then I can email you also some instructions to
yes.
Okay.
And whatever other questions you have, you can ask on. We can set up a group chat between the three of us. You can ask any
Okay.
questions you want, right? And we can figure out things from there.
And
Okay.
so you might have joined our previous calls, and then where
Mhm.
a lot of traders they asked us say, hey, Henry, from July to October, all my trades was working. It was easy. I just did the same thing over and over again. I made money. So it's true. And
Mhm.
so X tells us is that's the environment that we were in
Yeah.
before. And starting in October, everyone started losing or they're not making money as much as before. And then this tells you that we fell out of this kind of accumulation, easy time to trade.
Yes.
Previously, we were in this red zone. This is when everyone was losing money, selling, panicking. So that was happening during that time. And
Actually, we should note all of this. You know why, right? So here is the important thing to note, right? When the price action gets really tight and then it breaks to the downside, right? And the news is especially bad. So like I was saying before, right? Economic news is the critical news,
Yeah.
right? So will people stop buying things? Will they stop doing things, right? That's the question you should ask every time you see the news, right?
Yeah.
Will something cause them to do that, right? And what would cause them to sell off, right? That is tariffs, right? So in that situation, right, Trump had announced new tariffs on various countries, right?
Hmm.
So that made a lot of people nervous because now the prices of a lot of the items that they're looking for will go up in, by whatever the percentage of the tariffs that he was,
Hmm.
implementing, right? So if he said, "Hey, I'm going to put 100% on China tariffs," right? A lot of iPhones are made in China. Well, it cost 800 before. Now it's going to cost 1600 to buy,
Yeah.
right? So a lot of people will say, "No, I'm not buying it. I'm going to wait till the prices fall," right? Or something like the Fed raising interest rates, right? That's a problem
Hmm.
too, right? Because people will start taking their money and moving it into their banks, right? Because they will
expensive.
be getting higher interest rates from the banks too, right? So they will try to spend as little as they can, of course, borrowing, survival stuff and whatnot, right? So what you want to do is question it, right? Like ask, is this something that's going to affect the economic activity of the public,
Yeah.
right? And if that price action is tightening, and you can see right there on in 2024 and late 2024 to early 2025, you can see that things were really wiggling around
Slow.
there, right?
Yeah.
Slow, right?
It
And
reminds me of what
then
we're going through right now.
it broke down, right? Now, here's the thing: it can break to the upside too, like keep going back, right? Now, you want to
Yeah.
show it on the weekly chart so you can give it the bird's eye view,
So
right? If you show the bird's eye view, right, then you can see this pretty easily, right? And you can see that whenever the squeeze is tightening, right, you want to
Yeah.
watch those supports and resistances. You want to be like, okay, what's going to happen? And if it breaks down, check the headline news. Is it just some small thing? Because here's the thing: war news does not actually negatively affect the economy,
permanently, yeah, it's
not
temporary.
permanently, right? People will be nervous at first. They might be like, "Oh, I'm too worried about the uncertainty." But after
Yeah.
a while, people will say, "Oh, war means more activity because people want
Yeah,
materials. They want,
main
they're
buck.
going to mine for more things. They're going to, build more things, right?"
Hmm.
So if you do it that way, then okay, all right, this is something that we need to think about, right? So thing like I said, things like the Federal Reserve raising interest rates, or COVID, right? Or tariff applications, right? Those are
Yeah.
things that will cause people to maybe step back and say, you know what, I don't want to join, I don't want to do this,
Yeah.
right? So again, the question is, will people buy more things? Will people make more things? Will people, or will they stop that? Or will they go back? Will they hunker down? Will they say, hey, the risk is not worth it, so I'm not going to spend money on these projects?
Mhm.
right? So if you go back to the SPY, this a SPY or QQQ, it doesn't matter, right? But if you look at the weekly chart on the SPY with the squeeze, right? We want the squeeze and the ADX, right? Because
Yeah.
what this is telling me here is, look, that price action is tightening, right? So if there is, really bad news, we could break that support. How
Yeah.
far
Okay.
we go down depends on how bad the news is when it comes to economic activity, right? So
Yeah.
if you keep going back, now it can also break to the upside. And there are examples where you see there in September, right, of 2024, right? You saw there's tightening price action, and then it broke out to the upside, right? And then there in March, or sorry, November 2023, right? That was a pretty good break to the upside,
Yeah.
right? And in that case, you even
Yeah.
got the red to yellow transition. So
Yeah,
it's like, hey, that's something you take, right?
Mhm.
yeah,
So
this one is one of the free gems, Anon. This is
yeah,
like
yeah, this is one of the three gems we are
one,
giving
one
for
out of
the
three.
for the clarity call, right?
So
So
Frank, if there was just one thing that I learned as a trader,
mhm,
it's if I just could only take one lesson, it would be this one here. So just
yes,
bi-weekly, right here, you can bet the farm on it essentially, and you can make
yes,
a ton of money. This is a
except
45%.
during recessionary times,
Yeah, it doesn't
Yeah.
this
right?
year did
Except like when the Fed is raising interest rates, right? It won't work. Like you can see there in 2022, right, to 2023. You see how it kept going up and down, and
Yeah.
and so
Yeah.
forth, right? In that situation, you go to the monthly chart. But for the most part, if you, Henry, just keep going back, you can see, right, the red to yellow transition, right, and
Yeah.
also in situations where the price action tightens and breaks out, right? So you can do this, both ways, right? You can look for the red to yellow, right? Except, like I said, during recessionary years when Fed is raising interest rates and stuff like that, be careful, right? But if everything is normal and the Fed is like, I'm not going to do anything, right? Don't worry about it. Just look at the red to yellow, and you can see about 90% of the time when the red turns to yellow on the weekly chart, it's a great time to buy, right?
yeah. So this is the two main environments. You have the
Yes.
quantitative easing. This is the
Mhm.
easy money mode. Then you have quantitative tightening, and the
Yes.
market moves like that based on the Fed rules.
Correct.
Yeah.
So yeah, you have a yellow histogram squeeze, and you have
Frank has this guide, right?
yeah.
Okay, just making sure.
The clarity call comes with the quick
With the
start.
guide, right? Perfect. Good, 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 good. So
It's
Frank,
the quick start guide. Is
yes.
that
It's
Yeah, yeah.
inside.
okay?
Yeah,
Take
it's in.
a look at that guide and read it cover to cover, right?
Yeah.
And make sure you note down any questions you need answered,
Okay.
Good. Oh yeah, we got
right?
one of the gems, and let's see here.
And show him the monthly chart too, right? Because if
Monthly,
things
this
go down far enough, right, this is the biggest gem of all, right? That red to yellow transition on the monthly chart when people are really scared, you just buy. Like you buy and buy as much as you can,
this one here, you
right?
double your account. Even if you just did shares, you double your account.
Yeah, even if you just did shares. Now, if you did options, you might even quadruple the account,
Yeah.
right?
And what is the best time frame for option?
Generally, I would say daily to weekly, right? So if you're buying
No,
short-term
but
options, right,
yeah.
use the daily. If you're buying leaps, use the weekly, right? If you
Yeah,
can,
but for an option, like if I want to buy an option tomorrow morning,
mhm.
better for 3 months, 6 months, 3 week, a
Oh,
year.
oh yeah, yeah. So again, it depends on your risk tolerance and things like that, and where you think the market is, or the stock is headed, right?
Okay.
I found
So
um I have an example on
Yeah.
this
Oh, yeah. Perfect.
yeah, this trade, Frank. I took it I think it was like Tuesday or Wednesday.
Yeah,
And so
Wednesday I took the same.
Oh,
Yeah,
nice.
you took it? Yeah,
See.
did you get to close?
I'm still in it. I didn't get out Friday.
Oh,
Maybe tomorrow. Maybe tomorrow you can
I'm about like
yeah, yeah,
$500
that's
around
good.
it. Yeah.
That's what's up. Let's
exactly.
go. Okay. So yeah, matching up, like you draw the weekly resistance, and then you can see that hey, there's a huge trend change, massive
Yep.
Yeah.
candle on you, and then you have the yellow squeeze. Now, so for me, because I'm giving the trades out in the channel. I want everyone to win. So I did a conservative. I did December. So that's like what 10 months out. So I
Yeah.
Yes.
did 10 months out, and then it's a very boring trade. It's a very like grandpa way of trading. But I'm like, hey, I'm gonna put it out there, and I want to make sure that it's guaranteed that you're gonna hit.
Henry, let me just, I'm just going to quickly go to the restroom and come.
Yeah,
Just wanted to, but the meeting will stay on. I'll be right back.
yeah, sure.
Mhm.
Yeah. Okay.
Oh, I've seen other guys. They had an expiration June or May, and then those ones they pretty much double or tripled. Like they got 900, they got 600, 700. So those are all good too. Those are cool. It all depends on risk tolerance. So say
Yeah.
if I've been winning my last 5 trades, and then I'm like, hey, like I like Netflix, I have a high conviction on this play, then I could go shorter. I could go 90 days out. I can go 60. So but there's
But
other.
you still in?
No,
You
I
still
took it out
you took
on Friday, and
okay, you
then
took it out on Friday? Yeah.
yeah, so it has a plus and minus. So the plus is that I took the profit right away. It was like plus 300, 350 or so, small profit. So that was the positive. I got profit. And the negative is that it actually went higher after I sold it. So then, I kind of stopped looking at the stock. I try not to stare at it after. I just kind of close it, be done with it, on to the next trade. So but then for other people, like I've seen on Friday, like they're panicking over the weekend. They're like texting me like, "Oh, Henry, my account is 70% in, and there's bad news over the weekend." So everyone's biting their nails over the weekend. They're
Yeah.
freaking out. And then they said, "What do you do in that situation?" I'm like, "Well, first off, number one is if you know that we're trading in this kind of market, which I'm going to go to SPY. If you know that we're doing this, you kind of know that there's not that's not a ton of money to be made.
No, right.
You're putting yourself at
Yeah.
risk. And then, but when you do see this lets you know that I'm going to simplify my trading. I'm not going to oversize. I'm going to do just one contract. I'm going to do 1% stop loss, and I can just trade the chop. And so, you can do this on SPY or QQQ. So you could still go shopping for leaps. When you see those, like the other one was like AutoCAD, or was it AD Autodesk? That one,
Yeah.
if it's a high conviction play, you like it, and you see it at the 200, you can go shopping for leaps at the 200. Like that's it's good because those can work in the background. So say if you had with and you have a year on it, so that can be building you money for the whole year, right? And then you set it and forget it, go to the golf course, go to work, go do whatever you need to do.
Yeah.
That can happen, and that trades there, so you can monitor it. You monitor it, like every couple of weeks or so, make sure it's doing okay. And then you can sell out once you've reached your profit targets. So profit target, let's see, say if you enter now. Okay, so I'm looking, it was auto this. So let's see how to determine a profit target. Let's see, daily. Okay, see what I see here is I see a gap here. So whenever I see those, then I draw them with green triangles, because green rectangles, because I know that the price, it's gonna go there. I don't know when, but it's
Yeah.
eventually gonna go there. So so this one could be a potential price target right here, 266. This is one. If I had, say I had 2 contracts, I would sell one here. And then if I had one more contract and I was super bullish on it, I would
Mhm.
take here on the 200. Like that's likely to bounce off of that. So those are two ways to do it. Another way to do it is look at your histograms. You're in the yellow, so you're kind of early. Once
Yeah.
you enjoyed, so once you've been seeing this, the cyan, when you're in the blue, it's like, there's no point. This one you would have just, trade sideways. The option is losing value.
Yeah.
But this one you captured the upside here. Good 3, 4, 5, 6 bars. Like, oh hey, it's time to get out, and then you move on to the next one, even though you like that company.
Yeah.
Keep it behind you. Don't look at it.
But for a long term call, you will look more
Look
in
at the
the
look at the
weekly.
weekly on that one, right? Because you really want to check, because like I said, when the weekly squeeze actually tightens, right? You want to check, okay, where is the support, where is the resistance, what's going on, right?
Yeah.
So if it's kind of tightening there, right, and it breaks out, you take it and you set a maybe 20 to 25% target, right, with like a
Mhm.
5 to 7% stop loss. So if the stock drops 5 to 7% from your purchase price, you immediately get out and apply the money elsewhere, right? If it goes up 25%, take it out, right? And then watch to see if the ADX is continuing to the upside, right? So that it's
Okay.
trending,
And
right?
how the ADX you proposed me ADX
Yep.
DI
Mm-hmm.
is that
Yes.
the one you have there?
Yes, that's the one. Yeah.
Okay.
Right. So
And you
if
look
it,
you look at what?
yeah, you look at whether it turns green, see whether it goes above 20, right, to the upside, right? And you can do this both on the daily and the weekly chart. But if you use the weekly chart to buy, right, you can say, hey, you know what? I'll just use the weekly chart ADX, right, and then hold it a little longer and move up the stops as you go, right? So you just keep raising your stops. So if it pulls back to that, you get out and you're out. You don't need to continue in the stock.
Yeah. Yeah, the ADX, it has to kind of catch up to what the new trend might be. So this
Yes.
one here measuring that, like, okay, once I see the red, I know that we're in a negative trend. But
Yes.
this is how fast is that trend moving?
Yep. So
So
you can
think,
see this is a very bad one, right? It's really, pulling down. Now here you could say, hey, I'm going to just buy puts. So anytime it goes and hits that trend line or whatever, right? Or the 21 day, or the 21 period average,
Yeah.
right? You just say, all right, I'm buying puts,
but
right?
so this direction, but your support and resistance will tell you earlier
Hmm.
what's happening the trend. So this is current downtrend. ADX is lagging, but I see this. Like, so
Yep.
this what this means is that there's two possible situations. We could do this, which is a sideways,
Yep.
or decides where to go next.
And in
Or
that situation, you can look at the weekly chart to see if the price is tightening,
yeah,
right?
this
If you're getting
can give you a chance to figure out the
right.
low. It
But see
does.
here, it's not tightening because it's so volatile. It drops so far,
Yeah, it's
right?
going so fast. So this is another
Mhm.
scenario
Now,
that
a couple of things you can do here. See, Henry, look at where the ADX was lower than 20 before, and you saw the tightening weekly price action. See what
um,
happened there, right? It dropped below the resistance, right? So then you can use the daily chart to say, hey, you know what? I can get puts, right? Especially if the reason it dropped is something really bad,
for the weekly.
right? Have they
Yes,
taken on debt? Have they increased risk on something, right? What have they done? Why did they drop below that support, right? And then you can say, all right, based on that, I'm going to buy some puts, and I'm going to take that.
so this is your
Mhm.
chop
Yes,
zone, I guess.
and you
And
can
then so
see what happened. Look at what happened when the squeeze turned on, right? So when the squeeze turned on, the price action really starts to get tight,
that was shooting downward. This is a downward
right?
squeeze.
Then it broke down to the below the support,
This lets you know.
Okay.
right?
So this would be, I know I always show the buy zones on the upside, but this is buy zone on the downside.
Yes.
But here you can, trade this chop, buying calls at
Hmm.
280, buying puts at looks like 326. You probably would have been okay taking this, but this here is when the stock made a decision.
I would say, yeah, I mean, if you're going to take puts during the choppy time, right, you just take it down to the averages. That's it,
Yeah, so that would be
right? But if you're,
21.
if you're taking it longer term, right, then you want to buy,
Yeah,
like
there's yeah, there's
when
a
it drops, when it
yeah,
breaks through
there's a
the support.
yeah, there's a rule of thumb for your longs. You want to go longer out, like 3 weeks, 4 weeks, a month. You want to give yourself some time, but on puts, you want to go quicker. Actually, actually, scratch that. That might work better for just the index. So when you're trading in this chop, your puts are going to be quick. That's what less than
Yeah.
one, another less than 1 week. This one is 1, 2, 3 days before you hit the middle. This is 2 days.
Yeah.
And then your longs, let's see, your longs looks like it takes, let's see here. Okay, something looks weird on here. Let me see. Yeah, yeah, to get to the middle, your longs is taking about, it looks like 3, 4 days too. So
Now,
when you're in
remember,
it,
short-term trades use the daily chart. Long-term
Yeah.
trades use the weekly chart. Oh,
Yeah.
somebody's trying to come in.
this one, 15. Yeah, so if you're trading the chop,
Hmm.
it looks like it's a few days to make the trade, but your shorts happen a lot faster here. Like it takes a while for it to go up to go down. This is how many days? 1, 2, 3, 4 before it reaches the top. This one went from top to bottom. 1, 2, 3, 4, 5 days. This one is one,
Hmm.
2, 3, 4, 5, 6 days.
Yep.
Uh, bounce back. But yeah,
Mhm.
um, when you're in
But
this
yeah,
chop,
like I said, tightening price action. So when the ADX is lower than 20, you can play this, right? Like when it goes to like the resistance, and we have to tell him the, like the Bollingers, right? So Bollingers as well as RSI, right? 9 period RSI, right? So if the 9 period RSI when it's going to the top is higher than 65, and the Bollinger percent is higher than 90, right? So it's either at the Bollingers or above the Bollingers, right? Then you buy puts to protect
so
yourself.
for length, you want 9, not 14.
Nine, nine for the RSI with 65 and 35 as the overbought and oversold.
35.
Yep, exactly, right? So you can see like when it when it hit that top over there and it hit that 65 zone, right? See
Yeah.
how it dropped, right?
Mhm.
And then look what happened when it went down to below 30 or to 35, right? And
Good
it was
confirmation.
at support and it was outside the Bollingers, buy immediately, and boom, you can either take it all the way to the top if you're feeling brave, or just get out when it hit the middle right there.
Yeah.
Right?
2 minutes.
So when the ADX is lower than 20, this is something you can actually do if you're like, hey, you know what, I have time, right? If you don't have time, my recommendation is just, either get into cash, right? Or just wait everything out, right? And watch whether it breaks the support or the resistance and check the news to see what's going on, right? As to why it did what it did.
Yeah, this gives you kind of like two reasons. Like you have one that you're at the support, and then two, you're outside the Bollinger.
Yeah,
You're
and three, you have
Yeah.
the RSI at so it's like, hey, this is a good time to, look into buying. Of course,
comfortable.
set your stop below
Yeah.
the support, right?
Yeah.
And then once it hits the, once it hits that average, right, the middle,
Yeah.
part, take it off.
If you enter there and then you're starting
Hmm.
to trade in this zone, then you know something is wrong. Like when you see these, you're like, hey,
Yeah.
like I'm expecting a bounce, but on day number 3, I'm over here, and then your option is down 50%. You have to just cut
Yeah.
it. Yeah, it's too risky to hold it because it can,
Yeah.
it can do this, so you don't need to do that. This is enough to know.
Yeah,
But
if it breaks that down, right? That way you don't
Yeah.
lose a lot of money,
I made I made the 2 times this error on the
right?
trade
And
that week.
it
yes,
happens. It
exactly.
happens because this one here you benefited off that bounce. This one you benefit. This one. But eventually you're gonna catch one of these.
Yeah,
Eventually. But you have here that's one, two, three, four,
right.
and we're looking at a fifth.
And don't risk a lot,
Yeah. One,
right?
one,
Like
two,
when you risk that, right? Don't buy more than maybe 1 to 2 contracts max,
because
Mhm.
yeah, as a reminder, that
right?
you can't make this much money from here. Here,
Right,
here you can go, kind of crazy. Like,
right,
hey, I got some help from the market. But this one
right.
here,
And here's the thing: if you go back to the weekly chart, right? You will notice that when it was going up like that, right? Check this. Open the squeeze 1 second, right? The weekly squeeze was very it was not tight, right? It was like
Yeah.
serious move up, right? So when the squeeze is off and you're far enough away from that middle line, right? And the ADX is higher than 20, right? On the daily, or mainly the daily, because if you're trading spy calls, you'd be trading short term, right? So if the
Yeah.
ADX is higher than 20 and the weekly is not having any problems, like there's no turned on squeeze and whatnot, then
Yeah.
there you go, right? You can trade as
And
much as you
the
want. Mhm.
is the RSI you're using like in the middle?
Okay, so the RSI, right? You can, you're mainly concerned with the extremes on the RSI, right? When it comes to the uh, to any of the charts, right, it can remain overbought for quite a long time, right? Especially when
Yeah.
we look at it on the weekly chart, right? You can see it stays at the top for some time,
Yep.
right? But at the bottom, right, it doesn't stay very long, right? So when it actually does that, right, and you see that yellow squeeze, it's like it's time to buy.
this is a big deal. This one
Yep.
here, it can be noise. Anything on
Yeah,
the
it can stay there for a long time,
Yeah.
right? It's only when the ADX is lower than 20 on the daily, right? Again, because it's short-term trade, right? So you
Mhm.
use this tactic that we just told you, right? Where it's above Bollinger's and the RSI is above, 65 or something like that, right? That you you use on the daily. Sorry.
Yeah.
Yeah, we can give him another gem, Anand.
Yes, yes, yes. Hmm.
This one goes back to, we are gonna give you three gems, so this is basically how you can kind of like 5x, 10x your account with just if these kind of situations happen.
Hmm.
So here it's called the BPSPX.
Yeah.
So this is on stock charts, and
We can
we'll
send them the link to that on the chat.
show you the links for that one.
Hmm.
I'll have you in chat. Let's see. Have it in email. Let's see. Yeah, I'll share it with you via email also. Second, but yeah. So for stock charts, this is BPSPX. So in the past, we've seen this go as low as 14, 20. Whenever you see a BPSPX rating under or a value of under 20 or under 30, these what this is letting me know is that imagine a car that can go maximum 100 miles per hour. Like this, so this one here is running at 30 miles per hour. I know I can still go 70 more miles per hour. So this one
Mhm.
was, it looks like December of 2025. So if I go back to SPY in December of 2025, let's see. And then this is marking this bottom here. This is October to November. So this kind of the market was choppy, it sold off a lot. And so this let me know that it had this much room to go up. And then so going back to the BPSPX is here, this marked a potential bottom here. And in the past, you'll see it sub 14. This one is, it looks like April of
Yeah.
25. That's the tariff recovery. And then that one here, I think we just went over that one. And then that's this one here. And then that's massive. That's a huge. So if you ever want to know, hey, how much room do I have to run? We use the BPSPX to let you know how far can I go on long. So the usually the max level we've seen lately, it's been 80, it's been calming down at 60. So this is another thing to tell you that, hey, if we're going 60 miles an hour and the lately at the top has been, let's just say 70, it lets me know that I don't have a whole lot of room to go. Like the market's
Yeah.
just gonna, shoot up 100 points, in the next 5 months. It's unlikely. But if you
Mhm.
see this, you're like, hey, the next 4 months, it could be a huge recovery. So it's another one of those times where like, hey, I'm going to bet the deed of the house, or I'm going to go long. I have high conviction because the bullish percentage is low, and you can gain a lot from those, say, index leap contracts. You can buy like, say, real estate dividend stocks for cheap. You can pick up like your Microsoft, your Netflix, the
Yeah.
Autodesk. Those are like really on sale. The whole market is on sale, so I might as well buy my favorite companies, when I see this. So this is good to keep an eye out, and this is a good time to go shopping. And then let's see, I'm gonna go back to the agenda. Let's see, 10 squeeze examples and back test. So we can back test a couple. Let's see what we have here. We'll go back to this chart. I'm gonna take about this one just so it's easier to look at. And let's go through some. Let me look for just stocks here. Let's do meta back testing on weekly. So this one looks like a squeeze is developing. There hasn't been one here. It looks like this one has a squeeze. This one has a squeeze where it trades
Mhm.
sideways, and then it
And then,
decided,
yeah,
you know,
when it breaks out, you buy, right?
this
And then take that 20%.
this one. Okay, looks like it took you for a ride for a little bit. Let's try Lockheed. Let's see. This one is good.
Mhm.
This one is a really nice squeeze right here. So you identified, looks like yellow histograms, things changing over.
Even then, right, I would just buy on the breakout
Yeah,
rather, like when it went above the because see how that squeeze is kind of unreliable because it kept going for a long time,
yeah.
right? So my thing is I draw the supports and the resistances, right? And then I try to buy at the top, like or at the breakout,
Okay.
This
right?
one's a one. This one here, you caught the yellow squeeze and it exploded here.
Yep, and the squeeze was turned on, right? So if you looked at the, like see the volume reduction at the end, right? And you saw the tightening action, right? So that is where you start to say, okay, I'm going to look to buy when it breaks out, right? Now, where you buy during that breakout, right, is up to you, right? If you want more proof, then
Yeah.
you might buy later, right? But if you're like, hey, you know what, I'm going to, if you set that 5 to 7% stop loss, right, you can be wrong like 3 times and
Mhm.
right once with the 20% gain, right? And you will not lose. Your account will still be in good shape.
One. This one's a textbook
Yeah,
weekly squeeze with a really nice game. And then so
right.
what I was ranking on is that he was
Mm-hmm.
asking when do you sell? And so I
Twenty
like to sell
percent,
when I
20,
start
20 to 25%.
20-30%. When is the last day that I'm holding? If I see this blue, I'm out. This
Okay.
it's a good
Right,
rule of thumb. It's not gonna be perfect every time, but you captured all of this.
right.
So this one could hold long, but this is a lot of weeks to hold on before you
If
go.
you're doing options, I would say as soon as you see like uh, that 20% move on the stock, right? Which usually means something like a 60% or 70% move on your option, right? Take it and run.
Okay, this one is MasterCard. We're looking at yellow with Instagram weekly. This one, it's good. It just chugged up. That was a nice.
This is
15%.
this is one of those where I want to see tightening price action, reduced volume,
Hmm.
and a breakout.
Reduced volume there. That's there.
Right?
That's the
Yeah.
signal going on. Something's cooking there. The book, the How to Trade Stocks, that one it goes over a lot of
How to make money in stocks. That's the one.
how to make
Yeah.
money in stocks. That one it has several examples on
Mhm.
here on there. Going back to like 70, 1980, 1990 of the same setup. So this is before TradingView and everyone was looking at stocks in the way that we look at now. Let's see. I look at Ring. Okay, this one was a COVID stock, so I'm gonna try to look at just blue chips. Okay, so Netflix. Let's see here. Yeah, you have that tightening here.
Mhm.
Um, and then so don't ever.
Tightening, kind of reduced volume, right? Because all the paper handlers have been leaving, right?
Okay.
So when you see that tightening and the reduction of volume, that's when you need to look for the breakout.
So my
Hmm.
my favorite is because I'm usually in long term. Frank is the monthly, and the
Hmm.
monthly as you get higher time frame, the indicator gets more and more reliable. And so this is the last of the three gems, and this is where you find the monthly histogram. Like say on I'll go back to this one, but I'll show you SPY. This monthly histogram turning yellow. You only get this. Let's see, that's one in 2023. The last one was in 2009. Oh my, is it
No, no,
that
no.
far? Oh,
There was one in 2015. It's just hard to see.
oh, I see. Okay, so this one you have a 2015. That one's 2015.
Yeah, very hard to
50%,
see, right?
Yeah.
40% before you see the dark
Yep.
histogram. And then so you if you would have sold there, you still would have been happy. You would have missed a little bit more, but that's huge. This is really huge. You had five
Well,
SPY cards.
according to the top investors, never go for top dollar.
Yeah, yeah, yeah.
You know,
Yeah.
50,
just
50.
just sell it off when you get the profit.
So
You'll never go broke,
yeah.
Yeah.
doing that.
This last one, and so during this time, Frank, me and Anand was watching the markets, and we saw this yellow, and
We should have risked a lot more. I'll tell you that.
we're like kind of like being a
Mhm.
wimpy about it, like, oh,
Yeah.
okay, the two contracts, like, no, this is when you
No,
want to
no.
you want to sell the TV off your wall and
Yeah. Buy as much as you can.
buy like whatever 10 TVs.
After that, you can.
Yeah.
Yeah.
But yeah, this is my favorite gem. Out
And
of
notice the monthly chart does not tighten up a lot,
yeah,
right? And the
this,
weekly chart too does not tighten up a lot. So when it does tighten up, be careful. Watch for what's going on.
yeah, this trade is really hard to do because
Yeah.
what's happening is when you see this on the
Hmm.
news, like everyone's panicking,
Yeah.
selling, there's blood in the streets, buildings are on fire, like all forms of mass panic. Remind
Hmm.
Hmm.
every day that the stock market is down. But if you're quietly, you're checking the market and you see this, that hey, there's a shift here. And of course, in the group we're announcing that. We're like, hey, we see this is the signs in the past. This has been proven to, you know, be okay. And so you have to kind of calm like they say it, you gotta close your eye or hold your nose and then jump in and start buying. Like anything you pick,
Hmm.
you're probably gonna okay.
Yep.
But let me try to give some more examples. So Netflix on the monthly, squeeze works perfectly.
Yep.
Um,
Usually on the
Nvidia
high performers, it's going to do well.
one even more. Let's see. WDC, this is the computer chips started getting in demand because of AI data centers. They need this uh
Hmm.
deck. Looks like so if you went long, see this is
Well,
kind of
this is where
long time.
this look at how it stayed sideways for a long time, right?
Yeah.
This is where I would say wait for that breakout and then buy,
Yeah. If you're doing this, just draw a box.
right? The reduction of volume and the breakout, the subsequent breakout
Okay.
right after, then you buy,
If you see
right?
if you
Most
find it,
most stocks outside of the high performers are going to be that's the way you're going to play them, right? Because you can see the law, it can stay sideways for quite a long time before it blasts off.
This 10
Yeah.
years,
right?
10 years of this.
So my rule is watch for that weekly tight price action, right? Check, check the resistance, and when it breaks out of the resistance, then you buy.
Okay.
Let's see. Can you think of any other blue chips? The Apple.
Apple, yeah, Apple.
So
Uh,
monthly
so
histogram.
the squeeze works really well. Like the transition from red to yellow works well on the top companies, Apple, Microsoft.
Let's do AMD.
Um, yeah.
AMD, yeah, it's pretty decent. AMD actually kind of crazy lately, but it's still reliable. Yeah.
Yes. But when I talk about blue chips, I'm talking about like Meta, Microsoft, stuff like that.
This one here, oh, this one's beautiful. That one's nice. The yellow monthly histogram with the squeeze, paid really nicely. And then yeah, there's times where I just kind of go down the list and I'm doing this. I'm looking for, yellow squeezes. Okay, even Bitcoin. I'll use it on Bitcoin. You can buy Bitcoin at 25K and then you write it to, let's say, 73. That's decent.
Yeah.
This one's
Right?
like, so then so the good news is that we're starting to shift the histograms to red. So eventually, we're gonna see yellow again. It's just gonna take some patience. And so that kind of goes with the SPY as well. SPY weekly. I think I saw it on TQ.
QQQ is already red.
So this one is starting to poke into the red.
Yeah.
So of course, what I'm looking for is I'm looking for this. If I see this,
Yeah.
hey, it's time to go long. Because
Yep.
the weekly squeeze on the indexes is also pretty rare because the last one here was last year. So that
Yep.
took years. So
It's usually about a year to 2 years when it
November
does
23.
the red to yellow on the weekly. On the
So
monthly, it's every 3 to 7 years.
so when there's some uncertainty, like if you see a yellow and then you see a red, then you're like, hey, something's wrong. Like you can tell here, like this one is so smooth. If I took one contract here, a second contract here, and a third one was yellow, I know, hey, this is a smooth kind of transition into the bullish trend. This one
Hmm.
here is like a yellow, something's wrong, it's
Yeah.
red, something's going on here. So you still need
Yep.
to protect yourself, if you're taking these kind
Well,
of trades.
recessionary years, remember that, right? That particular situation was when the
This
Fed
one's
was raising,
quantitative tightening.
right? Quantitative tightening. They were or they were raising interest rates, right? And buying back bonds, right? Or I'm sorry, selling their treasury bills back to the
Yes.
banks, right? Taking money out of the system,
And this one here, any
right? So when you see that, don't trust the weekly chart. Instead, go to the monthly chart,
Okay.
right? But generally speaking, you can see, right? Just zoom out. You will see most of the time when on the indexes, QQQ and SPY, that when you see that transition of the histograms from red to yellow, it's time to buy. Generally speaking, you will be right,
Okay.
right? So we got the 10 squeeze examples, back testing,
Okay.
right? Cup and handles, right? Did you show him that?
we have exact company. Yeah, we can
Well,
show
here
one
is a good
right
example
here.
right
Let's see if
here.
I remember.
Look, right
Yeah,
here,
this
good
one is showing
example,
one.
right? See, yeah, right there,
Right there. It is correctly
Yeah.
okay then. And then
right?
I'll
And
do
then it went down, right? And then the paper handlers, left and it blasted off.
So this is how it looks on the weekly. This cup
Hmm.
formation, it tells us, and so it tells a story of people buying stocks, which is raising up.
Hmm.
And then this one here is the kind of like they call it the weak hands. People are selling like, hey, it's not working. I give up. I don't want to hold QQQ anymore. And then you reach kind of this bottom point where it's like now it's like,
Mhm.
hey, I'm getting in. I'm buying into the stock. I want to hold QQQ. It's bullish.
Yep.
So
Yeah.
what this did is you flushed, you essentially flushed all of these people. These are the people who they
Mhm.
they gave up. They didn't
But
want to.
there were still holdouts,
Yeah. And then
right?
they're holding from here, and then okay, I guess I'll hold it all the way here. This time here, they're like, I'm selling it. I got my money back. I give up, which is a
Yeah.
normal kind of like human reaction that like, hey, I went through
Yeah.
this pain from 2021 to 2023. That's it. I got to retire in 5 years. I'm not playing around anymore. I'm going
No.
out. Like there could be some older guys that are trying to retire. They quit. And then so you
Yeah.
have this tightening here. So this handle part. And so Anon is really good at identifying this handle portion here,
Yep.
which is pretty
In
this
fact,
tight.
I that's why I held on. I remember I was like, oh my God, should I sell? Is everything bad? And then I looked at the weekly chart and I was like, wait a minute, no, weekly chart's turning yellow. It's time to buy,
Mhm.
right?
So that the easy way to look at this one is
Yep.
draw a line on your cup, and then this one here is your buy zone.
Yep.
This one
Actually,
is
lower that line a little bit.
okay.
See where it went up, right? Right. If you, yeah, further down, right? See that? Yeah, that peak where it went down and then it peaked up, right? So people were like, thinking everything is okay, right? Because for a couple of weeks everything was, heading up, right? But because of the Fed interest rates rising, right, it wasn't going to happen. So a lot of people lost
Mhm.
money there, right? So you can see that when it went above that point, those people,
Yeah.
right, as well as the people who bought at the previous high, all started to take their shares and say, all right, I'm done here, right? And so for a while, you saw that downtrend, right?
This
During that downtrend, people were scared. You could see Jim Cramer saying everything is bearish. You look at CNBC, people were saying don't buy now, everything is bad, right? So I'm like, wait a minute, are they right? Go back to the weekly
Okay.
chart, I started seeing
Okay.
that up squeeze and out, right? It just blasted off.
so a good way to check temperature,
Oh
Frank,
wait,
is
wait, wait. Let him come back. I think he's gone for a bit.
okay.
No,
Yeah.
I'm
Oh,
just getting in the dog. Give me one
oh, yeah.
second.
Sure, sure, sure. Yeah.
All right, so this one here, Frank, is good to add to your chart. It's the 21 EMA, and then this
21. Add the 21 and the 8 EMA both.
go ahead and add the 8 EMA. Let's see if I
Yes,
have it.
because the crossover of those is very good to keep track of as well.
I'm gonna add the 8 EMA. I'm gonna make it value 8, and I'm gonna make this one yellow so I could see it. And then so let me take
8 and 21.
8 and
8.
21. Yes.
Clear up some stuff here. So then, yeah, so the 21. So some of the things that I'm looking at is I'm looking at the direction of the 21. So here you can kind of see that we have that flat, and then you have here almost this 45-degree angle.
Yep.
So you see the
Mhm.
21 is on
Combine that with the ADX and what's going on with the squeeze and things like that, and you get a very good method to to trade.
daily. Okay, so here you have that 45-degree angle on the
Yeah.
21. This is letting you know that hey, stocks are really strong, index is really strong. You have the green ADX confirming the trend. And so when they say buy the dip, this is your buy the dip environment at the 21. Everything here you can see things are going great. Everything's just fine. Here it looks like some consolidation, more green again, and then we get into this chop zone. So the chop zone essentially it's you reach resistance, you go back to the middle, you reach support, you go back to the middle, and sometimes somewhere in between, chop, sometimes you'll hit the top, sometimes you won't, but it's safe to say that you're going to return to the middle, which
Okay.
is here, which could be the 21 as well. And so when
Okay.
Don mentions the 8 crossing the 21, is that if you had nothing, so you had no other indicators. Let's see, let me take out the 200. we'll take out this. If you had nothing and you only had two indicators, the 8 and the 21, these crossover points tell you great times when the moving averages, especially on an index, these are opportunities here. This one here looks like cross. This one here is you get into chop. This is when you get in the chop zone. So then the cross stops working that way. But when there's a major trend change, looks like could be here or here. It's significant. And so yeah, so you can get a lot of trading opportunities in the 8 and the 21.
Well, you also want to remember if it breaks, if the price action is tight and the support is broken, and you see, so you're not just looking at one indicator at a time, right? You're kind of looking at a combination of everything.
Yeah. If you had the 8 and 21,
right,
you can confirm it here with the ADX.
Right, and if that ADX is turned red and we have broken that support, right?
Yes.
Right, or even before that, right? When that support is broken, right? You just say, all right, I'm taking, some puts, let it go down a little bit, sell it off, right? And if the ADX turns red, any pullback to the averages can be used as a buying opportunity for puts.
Yeah. Good. If you're looking at ADX wise, you probably would have looked at it like this. You would have seen, hey, we're in this chop and I need to be careful. And then you see that the market made a decision and says we're going down. And then your ADX confirmed that we are going down. So you know that there's downside ahead. There's downside ahead until, ADX changes or you see one of these and you're like,
or the squeeze, right? The squeeze, starts to turn yellow and, right.
So this one here looks like it's starting to kind of shape up. It's trying to clean itself out. And
yeah.
And that's the daily. What Bollinger indicator you use is a Bollinger percentage, or
one is you'll find it
not
here.
A percentage, but that also can be used if you can get that. Bollinger percentage can also be a good way to tell you whether where you are.
Okay.
Right, like if you're overbought or oversold, Bollinger percent is a good way to tell you that.
One here is a good one. Yep. Bollinger Band. So for the percentage, this tells you, is this the one that you use it on or is it a different one?
Percentage, it should be the Bollinger percent B, right? Which I think is the one you're using. Yes, that's the right one, right? Oh, but you can change, can you change the 20 to, like the default settings on that, right? To the 19 and the 1.58, okay. To reflect the one we are using here, right?
And then standard deviation is 1.5.
Yeah. Does it work?
Yeah.
Perfect.
Yeah. So this is telling you that when you're here in the red, that hey, we're outside Bollinger. So something's going on. And you know that we're in chop, we're in this kind
of when that ADX is lower than 20, right? You're like, okay, maybe now it's time to buy some protection.
I can short these.
Right. Yeah.
In here, hey, we're outside the Bollinger Band. And then it went down. And then we were on the bottom of the Bollinger, but I would also use the Darvis box. So I see, I'm outside the Bollinger, and then I'm close to the bottom of the Darvis box. I can take a call to the
both of these situations. Just take it to the average. Don't try to assume it's going to go down to the bottom. You might not always get that, right? But at least with the averages, you will say like, okay, it's at least going to go there, right? And for the most part, you can see you're right.
Yeah.
Right.
Let's see. The only thing I have left is Zacks ETF X-ray and building watch lists.
Yes.
So go to Zacks.com.
I've also given him the website in the chat.
Okay. Good.
Yeah.
And then so let's just do SPY. So if you go to Zacks.com, this is kind of like X-ray visions. You put any ETF in here, and then it'll tell you what's inside of it. And so here, so look at SPY, like what's inside SPY. So this one is telling me here all the contents. So I'll show 100. So SPY, I know that SPY gets rebalanced to all the high performers. They get rid of the low performers, has a low expense ratio. So all the top 500 companies are in here. So this is a good starting point. And this one here, you
This
have
this
all
is you can build your initial watch list with this.
these
Good.
these are all
Hmm.
yeah, they're all good. So then the squeeze works particularly better for stocks that are in the SPY. So one of the things I have my eye out on is IBM.
Hmm.
Info looks like, let me go back to here. Okay, so outside the Bollinger, let me take that one out.
Again, you could use the weekly to help you smooth things out.
So yeah, onto the weekly. Let me take this one out. Okay, so I had someone one of the members asked me about what I thought about IBM, and so I like it. It's setting up something's going on here. So one, this is a good candle. This is a hammer candle, printed on
Yeah.
the weekly. So what this is telling me is that price is pushing away from this low area, and then we have like this hammer motion, and so or hammer pattern. So someone is asking me like, "Hey, are you getting in?" I'm like, "Well, I want to, but I want to see this.
I want to see the yellow
I want to see
squeeze.
some yellow histogram
Yeah.
squeezes. Or yellow histogram without a squeeze is okay too. If I see 8 crossing above the 21, that's another good sign. And then if I have green ADX, I know that hey, I can hang on to this until the blue candle, and I'll be out. But I think if I took, let's see, if I take this to this, that's 20%. That's really good on an option. That's huge. So let's see, that's 11 bars. So let's say 3 months. So like 5 months out, safe. 8 months out, it's even safer. 10 months out is like really, really safe, but it's gonna be more expensive. So this one I'll take 4 months out so I can get a better price 5 months out. But I'm waiting for the yellow on this one. But yeah, let me go back to Zach's. Okay. So this one here, you can start building your watch list here, start doing your squeeze scans, flip through the monthly, flip through the weekly, flip through the daily, depending on how long you're trying to go.
Mm-hmm.
So we'll go back to IBD. So I think that's FFTY.
FFT. Yeah. Yep. This is
Okay.
the IBD 50.
This one is an ETF of these guys.
Hmm.
So they pretty much took their proprietary kind of like filtering of stocks, and we only have good ones. It's almost like their version of the SPY, and so they have a lot of good stuff in there. And then so here you got X-ray vision to look at what do they have, and so these are all good companies right here. Looks like that one could be a gold stock. Looks like another minerals
A
or
lot of these are gold stocks,
yeah,
right? Gold and mining.
yeah, and then FTAI. This is I didn't even know this was an IBD, but I saw it
But
as
look at the percentage, 52-week percentage rises.
just click on it or
No. Look on the rightmost side. You can
okay.
see. Look, this is why we say, right? Look at IBD, right?
What you're saying.
Mm-hmm.
See,
Okay.
these are the percentage rises, right?
So 300% on this one AU. That's wild.
Yeah. And look at MU, right?
Yeah, this one's huge. This one's
Pretty
really
good, right?
let's see. Just scrolling down. I'm just trying to see if I see anything I recognize. I think that one is insurance company. Yeah,
Right. That's why I say, right? Like after a market correction, make a watch list, right? And then look for that weekly squeeze change and buy the breakout.
I'm just gonna flip through, see if I can catch anything. I can see a yellow FIX, for you, IAG. That's a gold one. GFI. Yeah, everything here is kind of running like the market where it's been running pretty hot. The RGLD, I think that's another gold one. Oil gold.
Good.
FMB. Let's see. TDMX. Let me look at it again. TMBX. Okay, this one could be cooking something. Not ready yet. Let's see. AGI. But yeah, so this is kind of what you would do with the watch list.
But take a look at the base formation, right? base formation, reducing volume, tight price action, right? Those are what you're looking for,
Mhm.
right? And then once it breaks out, you buy it and then you say, I'm going to set my target at 25% rise of the stock,
Yeah.
right? And then you're like, okay, now I'll buy it, right? And then take the profit. And then if the ADX is still green, right, then you can buy any move back to the averages. That one is a very good cup and handle, right? Look at the number of weeks, right? Remember, each candle is like a week,
Yeah.
right?
We'll give you 25%. Yeah, this
Yeah.
here, this is
So
so
you buy the breakout, take your 25%, walk away, right? Then wait for a pullback. If the
this,
ADX is higher than 20, right, the pullback should, ideally work.
so if you're watching the squeeze, then this was your
Yeah.
opportunity here. And then if you're watching the cup and handle, that's your second opportunity here. So
Yes.
one
So if you
trade,
miss that first one, right, because when the base is forming, right, it's not always, clear, right? But when you see
Yeah.
the breakout, that's a pretty huge thing, right? So see
sometimes it's
how it broke out of the base, right? And then you say, all right, I'm going to take it at the top, right? Like the cup and handle top, right? And then wait for the next opportunity, right? And in this situation, of course, you have to be patient, but the patience always, really pays off here.
this
Right?
was
And if you
nice.
miss the
Yeah, this one
first,
here, I
well, this one is a
yeah,
little
this one
tougher,
I haven't heard of
right?
this company.
Well, that's what I'm saying, right? A
Yeah,
lot of
this
these
one
you wouldn't have heard of. And
I wouldn't have heard of this, but from
no,
IBD,
none of
they
us
put it
heard
on my
of
watch
this, right? That's why I keep saying look at IBD and see what they recommend.
list.
Because zoom out a little bit, you'll see how long these things stay sideways,
Mhm.
right? And that's why I'm saying, right? See how it's sideways, then goes up and builds another base, goes side, where it goes sideways for a while before. So you're looking for the tightening squeeze, the lowering volume, right? And the breakout, right? So you're like, okay, but I draw the resistance line. When it hits that, breakout point, I take it. And then I say 25% with a stop loss of about 5 to 7% drop. So if it broke out and it went down, right? You're like, all right, well, I'm out, right? Now I can watch again and see if it works. Because sometimes it'll take a couple of tries before the darn thing um, goes nuclear,
Yeah.
right? And you can see what happens when it goes nuclear. You get sometimes 400%,
Yeah, yeah, that's all
right?
we have on the agenda. But as you can see, Frank, we could talk about this for hours and hours and hours.
Yeah. Yeah.
Yes.
No.
It's good. It's really good stuff. So, um,
Hmm.
post questions in the chat. Ping us if you run into.
Yeah.
Yeah, if you have any questions, let us know, right?
Yeah. For sure.
But yeah, we'll be sending you the recording,
Hmm.
a private YouTube, so you can rewatch the session, and then
Yes.
let me know if you have all the
And
materials.
make sure you read the guide, right? And
Yeah.
get some of the books that we recommended as
Yeah.
well if
We'll
you
order
can.
the book.
You know,
Yeah.
then you'll really see the results.
Perfect. Sounds good.
Mhm.
Yeah. If I got a question on the Discord,
Yes.
we'll write you and
Yep. In the chat, right? And of
yeah.
course, uh, since we did the clarity call, right? You will be on the list to receive mail for the Sunday sessions, right? Like we said,
Okay.
the first Sunday sessions of the month are always going to be free, but the rest will only be for the people who paid, either for the guide or for the clarity call or anything like that,
Okay. Perfect.
right? So we give more value to the people who paid something, right,
Okay.
rather than Yeah.
Okay. And what's the next thing you will getting out soon? It's another type of
Oh,
it's I don't remember how you called it.
yeah, like a course, right? What we want to
Yeah,
do is we want to figure out whether we want to record the course or whether we want to offer it live. I think
yeah,
one of the weaknesses of offering it live is that we have to constantly recruit people every month, right? Because we would have like 4 sessions a month live,
okay,
right? Or do we want to record it, right? So that people can learn at their own pace, right?
Oh,
So that's the question we're still trying to answer. But once we
yeah,
have that, right, you'll get all the stuff and how to put everything together,
yeah,
right? And what are the strengths and weaknesses of the strategy, right? And we'll even talk about spread trading, right? Where you can actually make money on the SPX, right? And get like almost a weekly paycheck from it.
yeah.
So, you
that's in the
know,
works. We'll
yeah, a
keep you
lot
guys,
of exciting stuff coming up soon.
which we'll post it as soon as we get closer to
Hmm.
finishing.
Yep. Plus
Okay,
a scanner and like charting software that we want to try and implement so people can something like better than that, or not, maybe not better, but at least the scanning part, right, would be very good.
yeah,
The scanning software, right, where you can
yeah,
scan and see, is it squeezing, is it not squeezing, what's going
yeah,
on, right? Is it going up, right? So we do a multi-time frame kind of scan for that.
yeah.
So that's another kind of exciting thing in the works.
Yeah.
So yeah,
Perfect.
So
thanks, thanks
all
for
right,
thanks for
thanks
your
for
time.
joining us. Yeah.
Yes, thank you for your time, and let's see if I got a question. We'll ask
Yes,
you
let us
one
know.
time, and
Sure.
yeah,
Thank you. All
All
right,
right.
Frank.
perfect.
We'll see
All
you in
right.
the forums. All right, take it easy.
Yes.
Have a good week,
Yeah.
Frank.
Yeah. You
Yes,
too.
sir. Thank you very much, guys.
All of you. Mhm.
Take care.
Bye.
Bye.
Bye. Oh, let me stop recording.